Hey folks, welcome to Economic Observations. My name is Chris. Today is the 17th of August, 2021. I hope you guys are doing well. Sorry I haven't recorded anything in a few days. I hope you enjoyed your weekend. This video is sponsored by the Tanzania School Foundation, a nonprofit near and dear to my heart. So much going on today. We're going to talk about the Fed tapering and how they can do it. I know from other members of the Fed, they're saying that the Fed should start tapering in September and October. Is it possible? We know right now that the Fed is printing $120 billion of QE every month, and the hope is that the money goes into the economy. We know that inflation is running high. The prices of everything is soaring, and a lot of members of the Fed want the inflation to be under control. But is it possible? And is it exactly what the Fed really wants? Or is it just a bunch of lip service? We know, according to a bunch of July reports, that spending is going down. Treasury yields are flat after retail sales slow more than expected. Headline news today. Home builder sentiment falls to lowest level in a year as buyers face sticker shock. Retail sales drop worse than expected, 1.1% in July after rising COVID fears hit consumers, and on and on and on. So what exactly does the Fed tapering have to do with all of this? Let's get started here. So we know that they're printing $120 billion. Banks, corporations, people, individuals, retail investors, they're sitting on a lot of cheap cash. They borrowed the money at very low interest rates. That's why the stock market is at an all-time high. And there's too much liquidity, excess liquidity. There's too much money out there, and people aren't spending it. So now is time for the Fed to taper. They also say it's because the economy is booming and recovery is here, folks. This is what recovery looks like. Unemployment is only 5.4%. This is great news. It is time to stop printing money. Okay, so what effect will that have? Well, it's a little complicated. But first, I'm going to start off by saying if you look at the S&P 500, it is at all-time highs right now. And if you look at the price of gold, there has never been such a divergence in prices. The S&P is at an all-time high, and gold is really low right now. So there has never been this drastic of a spread between the gold and the S&P in the past 20 years. What it means is that an ounce of gold will buy you the least amount of stock ever in 20 years. Well, because gold is an inflation hedge. It is not an asset that people jump into to make a lot of money. Back to those retail investors, right? They are in the market to get rich fast. It's like day trading. It's like going to a casino. And how can you miss out on it, right? The stock market is soaring way beyond any fundamental values of the company. But the Fed wants to taper. And what happens when the Fed tapers? They want to stop printing money because they want the prices of assets to come down. Whoa, did I say assets? Well, what is an asset? An asset is a home, an asset is the stocks, and an asset is bonds. All right, you have three asset classes. When the Fed begins to taper, say interest rates bump up only 25 basis points. 25 basis points is 0.25%, 0.25%. And if that happens, I believe that the stock market will lose 10% of its value. Just 20.25 basis points. A lot of economists are saying that in order to go against inflation, that the interest rate really needs to be 4 or 5%. 4 or 5%. Can you imagine what that would do to the stock market? If bonds were paying 4 or 5%, the stock market would come tumbling down and people would rush to bonds. Oh, and speaking of 5%, the U.S. government has $30 trillion of debt. In 5 to 6 years, they're going to have to refinance that debt. And how could the government refinance the debt at 5%? It would cost $1.5 trillion every year in interest. The Fed is stuck between a rock and a hard place. Personally, I believe that all this Fed talk about tapering and raising interest rates so the prices of things come down and inflation doesn't soar is only lip service. They really can't do that, and they know it. I believe that the Fed wants inflation to soar. The only way to pay this debt is to print more money. They want inflation to run higher than interest rates so they can pay back the debt with more worthless dollars. Well, they're not going to tell us that because, well, the writing would be on the wall. But the Fed is in a bind. The Fed cannot raise interest rates. We tried doing it in 2008 when our debt was only $10 trillion. We couldn't get over the hump. Can you imagine all these cities and states and municipalities all around the world if interest rates increased and they had to refinance their debt in 2 years, 4 years, 5 years, whatever it may be? They would all go bankrupt. This is what we're facing. And this is why people say that, economists and other people on YouTube, that we're in for tough times. Interest rates need to be risen. People are saying no to spending. They're not buying things at the prices they are. And when people stop spending because the prices are too high, the economy shudders. So why is the Fed actually buying 25% of all the treasuries that are out there? Because no investor wants to buy a treasury bond with 1.3% interest, especially after it was announced that inflation was at 5.4%. So right off the bat, you are losing, 3.8% interest. So what investor in their right mind would want to buy a 10-year treasury note, say, at lower than inflation? So this is the problem that the Fed is facing. And I believe that when the stock market does eventually tank, and it will, it is an asset class. It is one of those inflationary, it's an inflationary item, but the Fed won't let that happen. And they're in a bind. I mean, yeah, sure, we want the prices of houses to come down. That is an asset class. Bonds will come down. Stocks will come down. They're all asset classes, and they will all tumble. Let's see what happens and if they really taper. They talk about September. Some Fed members say October. It might just be lip service. It might be, Jerome Powell came out and spoke today, and he said absolutely nothing. And he's saying that the surge of the Delta variant may very well be the cause for another pause on economic recovery. Is that just a delay tactic? I mean, there is a lot going on, and there's a lot to watch, folks. And why is Palantir buying $50 million worth of gold bars? Do they know something we don't? Companies are sitting on wads of cash. They're not investing it. They're not building factories. They're not hiring workers. They're not producing anything. Sure, they might be buying back their stock. Be careful out there. We are in for some strange times. And if interest rates do in fact rise, hold on tight, folks. Hold on tight. Thanks for watching. As always, I appreciate you. Call someone, tell them you love them. There are links in the description for the Tanzania School Foundation if you would like to learn more. And we will talk again real soon. I would love your comments. Please reply below, like this video, subscribe, and thanks for watching.